Lard Friese joins us now, the CEO of Aegon. Lard, thank you so much for joining us again. Just wading through your commentary so far today, you're talking about the positive commercial momentum you're witnessing in the United States and Brazilian markets. Just walk us through this catalyst here for the earnings.
Yes, good morning, Karen, and good morning, Stephen. Thanks for having me on the show again. Aegon is starting the year in good spirits. It's a good start of the year. We're seeing continued commercial momentum spilling over from last year into the new year, with life insurance sales in the United States up 5%, which is powered by the increase of our agency network in the US by 13% to 76,000 agents now. And we also see good, strong commercial momentum in the retirement plan business with more than 1.2 billion of net deposits. Brazil is the winner this quarter with a 22% increase in sales. We're seeing strong momentum in the workplace business in the United Kingdom. And also the asset manager is seeing positive flows, 2.6 billion in the global platforms and 2.2 billion in China. And those are reversals to what we have seen in the course of last year, where the asset manager was experiencing a more difficult environment to operate in. There are also weaker spots in the overall picture, which is the retail platform in the UK, which is still suffering from an investor sentiment that is slightly apprehensive in the UK. On the retail side, and we're seeing in the life insurance sales in China, we're also seeing lower sales because of, let's say, pricing regulation interventions by the regulator on the entire industry in the context of lower interest rates in China. But overall, I would say good commercial momentum, good start of the year. We have a strong capital position with 2 billion cash in our holding company buffer. Our buyback program of 1.5 billion is well underway, but we are also announcing today, given the strong free cash flows that we're generating and the cash buffer that is building up, an additional 200 million buyback program that we aim to conclude by the end of this year. So overall, we have a strong start of the year.
Lard, can I just pick up on that weakness, though, you're seeing in the UK consumer? We've seen the UK stock market at a record. The economy here is proving somewhat resilient. Yeah. So why is that sentiment lagging, given the macro backdrop here?
There's two things happening in the UK that are driving this, and it's an industry phenomenon. It's not only affecting our company's retail advisory platform business in the UK. It has to do with two things. Number one, of course, inflation has been high. The cost of living conditions in the UK are still subdued, and that is not helping retail investor sentiment. That's number one. And number two, we're seeing less defined benefit to defined contribution transfers happening in the market, which is also a key driver of retail investments. And as that is happening far less, that's also having a mitigating effect on the buoyancy of that environment.
Lard, I just want to ask you about the general premium renewal environment as well. I don't think I've ever seen, certainly this century, a better pricing environment for the insurers across various products as well. Is there a danger the industry is milking those premiums and the better environment a little bit too far and actually is creating problems for itself further down the line? I have concerns that it's actually now showing up in broader inflation indicators as well and creating interest rates scenarios that are higher for longer.
Yes, Steve, I can't really comment on the property and casualty markets, as we are largely a life insurance and financial investment products and retirement business. But if you look at interest rates and what has happened, I think the key difference between last year and this year is that the interest rate environment is more stable. It has become the national pastime to gauge if and how many rate cuts and when will those rate cuts happen. That is what we're seeing throughout the year. But by and large, this year, we're seeing more stabilization of interest rates, which is very important for our industry, as it makes our products more attractive. And that's good for sales and good for our customers. And it allows us to provide also more optionality in our products. So overall, that stable rate environment that we're seeing now is actually conducive for the entire life insurance industry as a whole, and therefore also for Aegon.
But your industry has seen such stunning revaluations by investors as well on the back of, as I say, a very a healthy premium renewal environment across all insurance products, including the ones that you wanted to focus on as well.
Yeah.
Is there a danger that actually this is going to create problems further down the line for coverage?
We don't see that happening at this point in time. We believe that there is a good opportunity and a lot of capacity to ensure that the products and services that we provide to our customers have the options that they need, that are appropriately catering for the needs that they have to plan for their long-term security. And in that sense, we think that the interest rate environment is helping. Of course, inflation not, but inflation is slowly getting better under control. What we have done to navigate clients through this, for instance, is in long-term care premium rate increases that we have seen, is that we're providing them options in coverage so that they can choose themselves whether they wish to maintain premium rates at a lower level in their existing contracts, or but then at the expense of lower coverage, or whether they have different coverage modules to ensure that they can really choose themselves to what extent they want to see those rate increases affecting their personal wallets.
Well, it's certainly a very healthy environment for the insurers and for Aegon as well. So we're pleased for you, sir. Thank you very much indeed. And the shares have rallied accordingly, up another 19% so far this year. Lard, we have to leave it there. Lovely to see you today, sir. Thank you for that. Lard Friese, who is the CEO of Aegon.